Bitcoin is immune from attack.
Welcome back to the Crypto Show's Digital Cash Evolution right here on the Bloomberg Network. And yes, we do talk about cryptocurrency quite a bit. That's that imaginary money that you really can't touch. You know what would be really amazing? What if it was tied to gold or something like that? Something you could actually touch.
I want to convert my Bitcoin to gold.
You want to convert your Bitcoin to gold? Bitcoin or your Bitcoin gold to Bitcoin gold?
Well, whichever I can. That would be great. Right. How can I do that? Maybe our guest can help us with that.
Yeah. So we have a great guest, Josh Scigala, who, Josh, are you over in Australia right now or what?
I'm actually in Berlin, Germany, but I'll be heading over to Perth to the Precious Metals Investment Symposium with Jeff Berwick will be there and Eric Sprott. It'll be really cool.
Awesome. Well, tell us a little about yourself and Vaultoro.
Yeah, I mean, we basically, I've been in crypto since early 2000 and late 2010, early 2011, somewhere around there. And so always, I fell down this rabbit hole. I've been in crypto before that even, and always researching the cypher punk movement and understanding cryptography and privacy on the internet. And one thing was always there for me is how do we have money on the internet? Because basically we've got these PayPals and stuff like that, but we never really had money, proper money, digital money. And the internet is made up of data and money. And we had the data really set down. We got these amazing way that money that data moves around, but money was really, really crappy. We couldn't do micropayments and all this sort of thing. So I was really always interested. And so I dived right into crypto very early and started building into a swap site that I built where people could just swap things instead of having money, but realized that it was pretty annoying to swap. If someone doesn't have something that you like, then the deal falls through. So you need some sort of token. And so I incorporated crypto into that and Bitcoin. And then I lost a lot of money in Mt. Gox. And Mt. Gox was a large exchange that went broke. It was one of the first exchanges in the world for Bitcoin. And it went broke purely because it wasn't transparent.
It's easier to describe it by spelling it out.
Yeah, empty Gox or
empty, empty Gox.
Yeah, it was really empty. And this was the problem I wanted to solve is that, hey, why crypto is so transparent, Bitcoin's so transparent, you can look on the blockchain exactly how much Bitcoin an address has got. So let's focus on building the most transparent exchange in the world. And also let's focus on an exchange where the counter asset isn't fiat. It isn't a bank account that's owned by some startup or owned by a bank that can just shut the account or freeze the account, or a government can come in and shut the account, and the account's being speculated with by the bank anyway, and in fractional reserve and all the stuff that we don't like in crypto. So we thought, well, the best counter asset is gold. It can be fully allocated to the person, fully insured, not like fiat, which is only insured to 100K by the FDIC. And fully audited. You can go in there, you can get a major auditor to come in and count the stuff. We've had 3,000 years of understanding how to secure gold and how to audit it and all this good stuff. And so we built Vaultoro. That's, vault as in a gold vault, and oro, which is the Spanish word for gold. And this is a big order book of thousands of people bidding and asking on the price of gold and actual allocated gold, and buying physical gold that just sits there. It's not speculated with. It's in their name as their property, so that if anything ever happens to us as a company, liquidators can't even touch our clients' assets because it's off the company books. And that was the major thing that we wanted to build. And we've been going for 4.5 years or 4 years, and we were developing for a year before that. And now we're going to add the second pair ever, which will be Dash.
Awesome. That's really exciting. So does that make you guys non-custodial also?
Yeah, that's right. It's non-custodial. It's fully allocated to the customer. So we just basically connect the two. One of the major things for me is we don't want people to have to trust us that much. You don't want to trust a startup. And these exchanges, all these exchanges are startups. 9 out of 10 startups fail, and so you really want to be able to build safe mechanisms in place for when you're dealing with people's money. And so it was really, really important for us. Well, for me as a gold bug, I really wanted to build something that I would want to use. And this was one of the things, full transparency.
I used to have a joking commercial here in Austin about, have you tried to email a bar of gold lately? It doesn't really fit in the USB port, does it? But now I guess you've solved that.
Yeah, well, I mean, the important thing was, like, when Bitcoin goes up in these huge bubbles, as it's in this price discovery phase, it's in this phase where we don't know what the value of this new asset class is. We don't know what's going to happen with these. There's a lot of competition in the market as well, and sometimes people want to step out from the crypto when they think it's gone, when they want to take some profits off the table and put it into an allocated asset that's in their name as their legal property. It's not, I mean, we all think, sometimes I say to people, oh yeah, but it's a bank, banks can fail. And they go, oh, bank, mine's in Deutsche Bank, as if that would fail. It's the biggest bank in the world. But people are quick to forget that Lehman was the biggest bank in the world, and Friday it was there, Monday it was gone. And as soon as
Absolutely,
you say that, they sort of, you have to jog their memory.
Yeah, and one of the things that I think is really interesting with that is that, the problems that were caused have not been solved. They have not been resolved. They've mostly been pushed out. And in fact, signed into law with the 2005 Patriot Act here in America, if such a thing happens again, the FDIC will not insure holders of accounts in those banks. Apparently, according to this law, the Federal Reserve will have first access to all assets, including anything inside of safety deposit boxes, should such an event occur again.
Amazing.
So not only is it worse than before in terms of the situation and what's on the books, but should a failure occur, people will not have access to any funds or objects that are stored in such banks should there be a regional failure. The Federal Reserve will get first access. And I don't think a lot of people understand that. And that's one of the things that I've tried to communicate, and I'm finding as a theme, is non-custodial activities and services are in line with the ethos that Bitcoin is bringing to the financial community. And I'm really glad to see that you're participating in that ethos.
Thanks very much.
Josh, real quick, can you kind of explain in layman's terms how the gold is attached to the Bitcoin? And I mean, is it just one Satoshi that represents a certain portion of gold, or I mean, how does that work?
Yeah, so it's not attached. We are creating a crypto-backed gold token later on in the year, but there's been a lot of problems with building a gold-backed token because, first of all, there's what's called demurrage. That's the cost of holding gold. You need big, private vaulting facilities, men with guns to protect this thing. You need auditors. You need insurance, right? So if you have a coin that represents 1 gram and you start sending that, who's going to pay for all that if it needs to stay representing to 1 gram? You also have these problems where you need to allocate that. So for those that don't know, if you have some Bitcoin in a Bitcoin wallet, you have a couple of Satoshis from the original pizza transaction, this 10,000 Bitcoin pizza transaction that happened in 2010, I think. And so what happens is these Bitcoins slowly get fragmented. So some people have tokenized gold or tried to, but what the problem with that is it's not allocated. So if there's a bad actor in the economy and they go onto, a type of a black market and Tor market or something like that, and the cops swoop in and bust them, they could say, hey, what's that? And they go to, oh, it's backed by that gold there. And they can just shut down the entire economy and take everything that's in the vault because that token represents a slight little bit of every single bar that's in that vault. So we're solving these problems by a defragmentation problem with smart contracts and this and that. But right now, how it works is you basically come onto the order book and you buy, just like on an exchange where you're trading against US dollars or anything else, you're trading against an allocated good delivery bar that's sitting in a high security vaulting facility and in your legal name. And then when you want to trade it back, you just trade that allocated bullion straight back to Bitcoin. So the thing is that, gold gold is it's very similar to Bitcoin. Bitcoin was a mathematical model of gold. You mine it into existence. It's a precious metal, and Bitcoin's a precious number that's mined into existence and then spent, not like fiat that's lent into existence with interest that doesn't exist.
Well, I did have a question related to some of the things that you were talking about. It sounds like if it is that ledger, well, Dan, I think you were answering Danny's questions about how the actual Bitcoin is converted into gold, and I was wondering, related to that, does that mean that there's minimum purchase amounts? Is it a gram? Is it an ounce? Like, how do you work that?
No, it's milligrams. So you can go down to the 4 cent at the moment, and we want to get that down to the cent, because our end goal is to enable people to be able to spend gold like currency and make it liquid again. But again, this is coming down to the fact that we need to, in the tokenization process that we're working on right now, with these smart contracts, they actually, what we've developed is what's called a smart bailment contract. And a bailment law is old common law, which states that you have the right, you have property, it's your physical legal property, and you give it to a company to secure it for you. You know, a lot of people say, oh, I want to hold gold at home. You know, if it's not at home, then it's not my gold. But the problem that is, if you go to an insurance company and get it insured at home, you'll see how expensive that is. And if insurance companies are good at one thing, it's good at researching risk. And so they know exactly how risky it is to secure gold at home. It will probably get stolen, because you tell a friend, oh yeah, I've got a little bit of gold, and a friend tells another friend and a friend, and it's very, very dangerous. And if you're in a developing country or in an African country where the security mechanisms aren't the same as some countries, or you know, even in some states in America, you just don't want to call the cops, because they're just as dangerous as anyone else, right? Especially with asset forfeiture and all this sort of thing.
I lost my gold in Chicago. I don't know how it happened.
yeah, exactly. But yeah, so yeah, it's. I think, you know, we're living in interesting times where we're seeing the ability for private citizens not to have to deal with a government-issued gold-backed currency, but even not having to choose a gold-backed currency. They can choose to have a purely crypto, or a gold-backed token, or not even a token, but some actual old-school standard gold sitting in a vault. And now with Dash integration, we're going to have you know, some of the great benefits that Dash brings on board as well. And you know, for those that don't know, Dash has this amazing. It was the first currency in the cryptocurrency space to have what's called a decentralized autonomous organization. And that's, I know that's a big term, but what it basically means is it's this smart contract, which means it's a program that stores liquidity, stores currency in it, and anyone that's taking part or holds some Dash, a certain amount of Dash, can vote for proposals that get sent to this contract. And so we sent a proposal in saying, hey, we want to integrate Dash. And everyone voted on the fact that, yeah, okay, we'll send out an X amount of Dash to help you with your development. And this is the first time where a computer program, or an autonomous program sitting in the fog of the internet, sitting in the cloud, has been able to pay humans or projects autonomously without interference of a central authority. And that is so exciting, and that's so cool. It's the future of venture capital. It's really, really exciting.
But I did want to bring in Danny, or excuse me, Joel, a little bit and talk about, like, what are you seeing, Joel? What's your perspective here on, like, the merchant adoption aspect, how Vaultoro might fit into this picture, and maybe you want to talk a little bit generally what's going on with merchant adoption.
And what's this new thing about pegging cryptocurrency to cars?
Oh yeah, the petrol standard. Isn't it called the petro? Hey, just kidding. Yeah. No, but cryptocurrency merchant adoption has always been a big kind of thing since day one, when people were talking about what is this new Bitcoin thing, and then people just say, well, can I buy a glass of milk from it? Can I buy my cup of coffee? What can I get with it? And then the answer just like crickets. And then you had people trying to say, oh, down the street, I got this place. I tipped my waiter in Bitcoin. I did whatever. And then since the whole Bitcoin adoption push kind of slowed down as it transformed a little bit more into a store of value than an actual currency, you had every kind of different people, from Bitcoin Cash people to Litecoin people to everyone else, just clamoring on merchant adoption. How many merchants can you get on board? What can you do to prove that? And then over time, we're starting to see that there's always a bunch of extra steps involved. So first off, I'm very happy with where merchant adoption has been today, specifically with Dash. I mean, I don't have a bank account. I don't have fiat. I just have Dash. And around me, there's enough places I can go spend my cryptocurrency on, but more on that later. There's over 3,200 Dash accepting businesses around the world as of right now, actually about 3,300. And it just continues to grow. Over half, or nearly half of those are in Venezuela alone. And I wonder why that would be.
Right.
So, because it's working.
Yes, because there's a couple different reasons, but a main catalyst to that is you have people who absolutely desperately need a system like this.
And you kind of organize a site, or you're part of the site that keeps track of all of this. How do you keep track of not only how many businesses are accepting it, but how many people are actually using it at these businesses?
So all project of my group, Dash Force, that I work for, is discoverdash.com. And it's essentially just a merchant directory. So we have people from all over the world. Whenever they have a business that accepts Dash, they go and submit a listing, and then those are every single one of those is manually approved, because we have full-time employees and stuff actually working on that site and just keeping track of it, answering the live chat, etc. But so every single one of those businesses is independently verified, and that's how we keep track of ones that take it. As for how many actually accept it, how many payments are actually delivered, that's a different kind of a thing, because you have to, how do we find that out with fiat currency? Well, you'd have to talk to Visa. How many does Visa process? But then you have to talk to MasterCard. How many do they process? Et cetera, et cetera, et cetera. Now, cryptocurrency has this unique decentralized kind of thing to it, that where you can't be sure of what every single transaction was actually for. So if I bought a car off of Chuck, or if I just moved something from my Trezor to my Ledger or back, or I just played a bunch of Dash Kitties, well, it doesn't exist yet, but whatever, it would all look the same on the blockchain. It would all just look like, just transactions. So it's really hard to tell from just that. But you can actually ask some of these, if there's a point of sale system, you can actually figure out how many transactions they processed. I do know that, just anecdotally, when there was only 500 merchants accepting Dash in Venezuela, 1/3 of what it is today, which is, like a month or so ago, I believe that about 198 had already received their first Dash payment. And that's the one anecdotal thing that came across my mind. Here in New Hampshire, I was talking to the manager of a popular restaurant in Portsmouth, and he had said over the last about month, they'd had about 20 Dash purchases at that location. So I'm sure it's not like full-on hardcore adoption yet, but they always talk about the chicken or the egg. Who's going to get some Dash unless they know where they can spend it? Or, well, who's going to want to accept it if they don't know who's going to buy it? It's like, who do you create first? The customers, the opportunity? Well, the best way of solving the chicken and the egg problem is solve one of those two things, and then you kind of shut up the question. It's like, well, we already have the egg. Now let's get the chickens on board.
A couple of weeks ago, I was kind of repeating something I had heard on your show about the exchange in Venezuela having more Dash transactions than any other or all of the other cryptocurrencies combined. Do you remember what those numbers were? Or
I don't off the top of my head. I do remember that quoting a couple months ago that exchange, I believe it was the same exchange, Crypto Buyer, yes, that their top coins were Bitcoin and Dash, fought handily, very close. That's and I guess maybe Dash has overtaken Bitcoin since then by a good degree. Who knows? But I think what they said, or what you guys said during the show, was that Dash outnumbered Bitcoin on the number of transactions, but that Bitcoin outnumbered the volume. Yes, that might be true. From what our folks on the ground seem to be saying is that people still know about Bitcoin and use it, as far as some people buying it and holding on to it, but no one is buying stuff with it. Everyone's buying stuff with Dash.
The thing about merchant adoption is, and this has always been a problem, and it's still a problem, is that large exchanges even find it very, very hard to secure Bitcoins. Now imagine mom and pop stores who are accepting crypto or Dash or any other, Bitcoin or Dash or anything else. Is that how do you secure that, and how do you have your employees constantly keeping up with how to use it when the odd person comes in maybe once every 2 weeks, and maybe your employees have changed since then? You have to keep on training and this and that. And I think this is fundamentally a UX problem. This is a user experience problem that is slowly getting fixed, where the way to secure these coins are getting easier and easier. And it's super important that mom and pop stores are able to secure these coins without too much of a headache and without too much anxiety around what they're doing, because they're
definitely think you hit the nail on the head there. I think the experience is it, and it's only going to be usable if you don't have to remember how to use it. Once you learn how to drive a car, you're pretty good in most cases, unless like you're in America, you haven't learned how to drive a stick. But now that's only 2% of vehicles sold, right? And it's because of that UX, right? I think a big reason that 98% of cars sold in America are automatics is because it is easier to use. Just simply that. You don't have to learn as much. You don't have to put as much investment into learning how to work.
Insurance is actually cheaper for a standard because they're less likely to get stolen. Any car thief over 30 can't steal a standard.
Right.
And is there any wonder why
under 30?
Is there any reason why that's the only kind of car I drive? Just saying.
Hey, well, that's why I use Windows NT. Because no hacker even knows how to use that operating system anymore.
Yeah, or how about Windows Vista, where no one at all knows how to use it?
Yeah, that's true.
Right.
I'm kidding.
Next anyway, right? But yeah, that is definitely, I think, the right approach to merchant adoption. We need to get the UX down. I think there's a lot of organizations that are working on it. That's why I'm a big fan of Dash. We know that they're trying to make it approachable from a platform perspective and really enable developers to build on top of that. And I'm really curious, Josh, how you might be talking to or thinking about integrating or involving the development community, non-consumer communities, merchant communities in what's going on with your Vaultoro token.
Yeah, this is something that we're definitely going to work on. It's going to be open source, and we're going to definitely allow third-party developers to develop on the APIs and on the protocol. Our main protocol is actually the Vault token, which will allow people, which will allow us to build an entire framework into tokenizing assets. So we really want to go to Vault operators. Hayek, the economist, the Austrian economist, really talked about back in the day where each bank could have their own currency, and they all competed against each other. So the gold certificates that you might have from one bank might be worth a little bit more because people trust that bank. They do good auditing, this and that, and people don't trust. So the gold certificates in the other bank gets a little bit cheaper and crappier, and you can't sell it for much because they're not doing proper auditing. So what we want to allow is for vaulting facilities to all be able to tokenize what's just sitting there. And we're also looking at tokenizing what's in the ground by getting companies to check gold veins that are in the ground, multiple companies, maybe 3 or 4 companies to check independently and give an independent result back. And then we don't even need to dig this up. Then what we would do is have a DAO that's sitting with a bunch of cash that's sitting by every token holder has a key, and they can vote whether we actually dig it up or not, or we can just continue spending the gold that's in the ground. That means it doesn't even need to be insured or audited post. So these are just interesting concepts, but they're wacky concepts, and this whole space is designed around experimentation in economic theory.
Yeah, so when we're talking about merchant adoption and UX and stuff like that, there have been a couple of good point of sale systems that have come out that have made it easier from my personal experience in buying stuff than using a credit card or Apple Pay or any of that. And I've actually timed it and I've seen a store clerk take my Dash quickly, and then the next person said Apple Pay, and they said they didn't know how to do it. I had to ask the manager. So
Wow.
AnyPay is the one that is used all over New Hampshire, and the creators and owners of AnyPay also have been big crypto evangelists, and they recently got a major car dealership in New Hampshire to take Dash, and they bought a car with it, and they have some videos of it doing it and all that, and it's pretty crazy. You can just go and buy a car for cash. I mean, digital cash.
Wow.
Just go straight down there, and I don't know. I'll have to report on it if I decide to go down and get myself something that's not 15 years old, but we'll see if that happens, because
that's exciting.
It is really great. And you start talking then you can talk to a mechanic shop. Hey, I just bought a new car with Dash. I want to know if you can fix it up for me. Otherwise you'll get, if you do, you get all my business. And
my mechanic here in Denver is actually registered on discoverdash.com.
And I have a question. I have a question about that. So this car dealership, I noticed that it was an AnyPay platform. Is there money back for that? Do you get Dash back for buying a car?
So some intrepid investigative person said no, that they've looked at the blockchain. They couldn't find traces of that, which would be great. Because if you buy a 10 grand car and you get like $1 to $2 grand back, that's a good immersion incentive. Usually, so the AnyPay platform has some built-in thing funded by the Dash Treasury to where if you buy a $2 cup of coffee, you'll get 10% of that back, just to be like, all right, it incentivizes the spending. But I honestly don't think that they would do that for that.
Okay. Now I wanted to get into something else with Josh and Chuck. So Chuck, when I talked to you before about evolution, you were talking about schemas. Mm-hmm. How could a schema work for Vaultoro, these smart contracts?
Yeah, I think one of the things that I'm anticipating is, and just so you may be aware, the idea of schemas is going to be Dash's answer to smart contracts. So the main difference being, rather than conducting the processing as Ethereum does of programmatic material, the developers on the Dash blockchain in this case will be provided a DAPI SDK, a decentralized API software development kit that they can plug into their applications that will basically manage a lot of the difficult cryptographic work of talking to the Dash blockchain within your application, and enable you to basically invoke transactions and other things of that nature. And with the version 13 upgrade, one of the major pieces that's going to be coming in addition to usernames, is special kinds of transactions that will be able to define data. And that will be a schema. So you can register a schema with your username, and that schema will be validated by the network, by the masternode network, so that the data pieces that go into it will be, whatever you want it to be. Now, there's going to be some stock stuff that'll come out of the gate, like basic user information and maybe like inventory information or shipping information or those kinds of things. Those might be some standard schemas that we'll put in, and then you'll be able to store that data on an IPFS network provided by the masternode network. And basically, again, going back to the difference here, you're not processing on the Ethereum blockchain or on the Dash blockchain. You're processing in your application and then hashing and storing the results using the DAPI and the DAPI SDK on the Dash blockchain. So you get the security of the proof of work in addition to storage of data and the results of processing being stored. So that's going to open up all kinds of opopportunities.
That's amazing.
Yeah. And there was another aspect to that, Chuck, that you had mentioned about the gas,
right,
more affordable
exactly.
It is versus Ethereum.
Yeah, so since you're not asking the network to actually execute the processing, you're basically asking them to just store data, validate and store data. That's what you're asking of them. So the work is very much cheaper, and the reward that needs to go to the miners and the masternode network to conduct that activity is very much less. But nothing happens for free. So when you register a username, for instance, it may be, let's say, 1,000 duffs or 1,000 satoshis. Some of that will be set aside as payment to the network, but some of it is also going to be sitting in your kind of a credit account. So you'll have these dash credits that will sit behind the scenes, so that you can do other network activities like store data against the schema, like register an address, register profile information. But I think follow-on versions beyond just those basic schemas, eventually you'll be able to register your own schemas. So I would anticipate companies like Vaultoro would literally be able to issue tokens on their network that wouldn't have to be processing tokens. It could just be a new kind of ledger with an initial issuance, and all of the schema controls of your token can be managed from a data perspective rather than a processing perspective.
I thought that you had mentioned at one time there would be 1 million transactions for one gas or whatever.
So yeah, it's going to be very cheap. There will be some allocation of tokens and or duffs credits to each standardized network activity. A state transition. But one of the additional changes that'll be going on to that is the memory pool of ongoing transactions. You won't necessarily have to write to the blockchain in order to exchange value or information. With the state transitions, you'll be able to carry information. One analogy that we typically use, or that I had heard used in the design phases, was the buffet table or the buffet restaurant scenario, where you go up and you execute a transaction for a certain amount of food, but that transaction doesn't hit the blockchain until you've gone back and forth a number of times, and then finally it's all rung up at once and a collection of transactions are collapsed into one. So that collapsing activity is going to enable a lot of different kinds of transactions to be done without creating additional bloat on the blockchain, which I think is a really interesting angle.
That's amazing. And it's being paid for because the masternode owners are getting rewarded by the actual blockchain, which is cool. So you don't need to pay massive amounts for the gas, like gas equivalent.
Exactly.
One thing we did, I talked about it before, how I wanted to create the most transparent exchange in the world. And how we did this was by giving every user an anonymous ID, and then they can log out so we don't know that they're checking, and we publish every anonymous ID. And then each anonymous ID next to it has the amount of Bitcoin and the amount of gold that they hold and the amount of Dash they hold in the future. Mm-hmm. So then you can check how much it's got, and then check the sum of everybody's holding, and then check that against the cold wallets and against the the vaulting facility statements, the auditors, and the insurance paperwork. But what we're looking at is to publish every trade, take that one step further and publish every trade into a blockchain. And something like that might be an interesting use case. We could be looking for the right blockchain to do this on. And this sounds really interesting. And to take this even one step further, we wanted to build something that I've been thinking about a long time, is a type of unhackable hot wallet. A hot wallet is for the listeners that don't know, is a wallet that's attached to the internet, and it's hot because it's on the internet. So it is attackable by an attacker potentially. So how to make that unhackable is by saying, okay, if you're a user and you upload crypto onto Vaultoro, then we take that transaction, we put it into the blockchain, and then when they trade, every trade's inserted into the blockchain. And now the hot wallet is actually a multi-signature wallet. That means 2 keys need to get signed, and one is a bot that basically checks the blockchain if that user has that amount of money that they're withdrawing. So if an attacker came in and changed the database to 100 Bitcoin, then the bot, and then they go to withdraw, they turn 1 key, and the bot would have the second key check an independent blockchain and go, hang on, they inserted 1 Bitcoin, they traded a bunch of times. No, it's more than he should have or she should have, so I'm not signing. And these sort of mechanisms allow us for internally, not because most hacks happen probably internally. External hackers are a lot harder. So these sorts of things are really interesting. So having a ledger or a schema based into a blockchain would allow us to insert data like that would be very interesting to look at.
Yeah, absolutely. And I think one thing that you might also be interested in is the idea of the masternode quorum acting as a witness in that scenario. So there's going to be a sub-selection of masternodes that will basically co-sign transactions of that kind, that are state transactions or finalized sets of state transitions that can do that kind of verification that you're talking about, where they
What is this, like a separate group of masternodes, or
it's a subset? Yeah, so a subset of masternodes will be kind of engaged in collections of activities for periods of time, and this is what we call kind of long living quorums, where you have these transactions that kind of sit in memory space, and they're handed off and handed off and handed off. But when transactions are finalized, all of the inputs and all of the schema validations that need to occur will be done by those in that quorum for a selected set of transactions, which increases the capacity of the network. So, is
it a selected set of masternodes?
Yeah, it's a randomly selected set of masternodes, 25% of them being old, 25% of them being new, and then the remaining 50% being a random selection of somewhere in the middle.
Wow.
I know they had there was something similar to that in the Nexus protocol, where they use a trust. The older chain, the oldest chain, or the oldest nodes are the more trusted nodes, and so they carry more weight.
Right.
Hey, do you know what I find lovely about this entire crypto space is that we're all here talking on a fairly mainstream media outlet, and we're talking about money creation and where money comes from, the technicals about the money. And this is something that hasn't really been talked about, apart from maybe interest rates from the Fed. That's about as far as people go. But now we're talking about the intricacies, and I know we're very specific here. We're very technical, but at the same time, the more and more people that I talk to on the street are talking also about the technicals. They're talking about how many coins are available, what sort of structure is it? Are they masternodes? Are they, now they're talking about subset of masternodes. Fascinating stuff, and I really feel very, very blessed to be alive during this time, seeing money change for the first time in a very, very long time, and that power being taken away from the banks.
Yeah, I completely agree. When I read the Bitcoin white paper, I realized, oh my God, this is humanity's exit strategy from the fiat central bank and government control over value. Yeah,
and it has, folks, the control, the monopoly on currency by central governments isn't that old. Like, money used to be free. It used to be free, it used to be in the free market, and now it's been controlled for the last few hundred years.
There's a book, I think it's called The End of the Political Class. No, I'm confusing this book, but I'll have to look it up. But there's a book that I read, and it goes into detail about the American history of finance and economy. And one of the things that I picked up there, you were talking about Hayek's statement about how there could be a case where every bank has its own currency. And I think many Americans, and perhaps many people in the world, may not be aware that we do have a previous example in American history where indeed this was the case. And I think it was between the years of 1815 and 1845 or 1860. They call it the free banking era. And there were regional banks at that time scattered throughout the U.S. that had issued notes. And those notes carried value in the regional areas of banking control, but would go down and have less exchangeability the further away or out of their regions of geography you would have. So you'd have to exchange them for the local federal note. And that went on for just about 1.5 to 2 generations. Until they started bringing in or making movements towards central banking after I think the London Bank had kind of kicked off.
And I mean, I do understand the idea of one single currency because the technology wasn't there. It's very annoying. I mean, before the euro, traveling around to different European countries, it was really annoying because you had to go to the country and then there's this different cost and they take huge spreads between the different currencies and it's just annoying. It gets annoying now when I even go to a different country that still doesn't have the euro. It's like, But with crypto, it's not annoying, especially when we start having decentralized exchanges where one wallet, you just say, oh, you want that coin? Bloop, send during the motion. It'll be a free transaction. It'll change to a different coin and and the different coin will arrive in the wallet that you're sending to. And so the technology is getting easier for us to have competition. And why is competition interesting and important? Is because competition keeps the bastards honest. And really, that's what it comes down to, is that when a government, and you can see it in Venezuela, where the government has taken total control, totally manipulated and destroyed the middle class, destroyed the saving class, destroyed even the lower class and the upper class. I mean, they just destroyed everything.
Yeah, everything's been wiped out.
Upper elite. And with a competing currencies, you can say, hey, you guys are messing with my savings. There's a bunch of exit doors. I'm going to take one. And even that threat of that exit door keeps the bastards honest.
It helps. Yeah, it definitely helps.
You want to bring Joel back into this?
Yeah. So, Joel, we did get a little bit away from far afield from merchant adoption and maybe got a little bit of political, but I really think that, and I know that you agree on this, getting individuals set up, getting them to actually conduct transactions is still that experience, that user experience is the best way to get people on board, to actually educate people on this train.
Yes, absolutely. And that's one thing that I think that a lot of people neglect to realize is every single major payment system in the world has gotten kickstarted. It was not discovered under a rock, did not come down like manna from heaven. It was created with a strong team that pushed it forward and sometimes gave people particular incentives to use it, or, for example, merchant sign-up bonuses and things like that, and made it like a large push. And we forget that credit cards have been around since the late 50s and weren't in wide use until relatively recently. And just the thing with cryptocurrencies, a lot of people say, oh man, what's been the deal with this country, or oh, you guys are just lucky because of that. There's a lot of like naysaying going on, when if you look at the examples, the technology speaks for itself. It sends and receives anywhere for pretty cheap. For in Dash's case, almost free. It's extremely inexpensive. It's secure. You control your own funds. Like, what are you waiting for? It's basically miracle money. What are you waiting for is someone to actually make that case to some people. And when you see where this has been successful, you see New Hampshire, I mean, particularly you see a group of activist people who are actually, who have philosophical reasons for having almost all their net worth in this, and want to be able to spend it because that's how they change the world. And they're willing to go out there and talk to people and just say, you should use this and make this case. That's why New Hampshire is ranked very highly on the cryptocurrency acceptance map. And you have the same thing in Venezuela. It's not just that there's a current economic crisis there. It's that you have several teams that are very well organized and they're funded, that have been operating for a year, working very hard, going to business after business, giving them the pitch, telling them how to do it, getting them set up, checking back with them later, making sure they send some customers, making sure they have support, acting like a real team. And anywhere you see that, you'll kind of have this sort of thing happening. And then part of that means it's just like, I mean, just the other day, I was talking with the CEO of the Dash core team and just sending him some Dash from my phone to his to demonstrate a usability issue with a wallet, which was fixed several days later. Like, this is what it is. It really is. You just send it, you just use it yourself, and then you see, was that good? Was that not good? Oh, what do we change about that? Right. And then you honestly compare it to fiat currency solutions. I mean, think about, let's just talk for just a second about the average coffee shop that, say, uses a Square point of sale system. Well, first off, you got to enter the payment. All right, card. And then you got the swipe. Do you swipe it, or do you have the extra chip reader? And I've had issues with one or the other before using cards in the past. And then if it works, it's what, 2.75%. And if it doesn't work and you have to manually key in the car, it's like 3.5% plus a 15-cent fee after that, which is pretty terrible. And then once you do that, it goes, oh, you got to do the little signature thing, and then print, and then yay, you're done, I guess. But there might be a chargeback. There's a significant risk. Well, I don't know how significant you call it for like a coffee shop, but I believe the industry standards like 0.5 to a full % of transactions get chargeback problems. So you go to Dash, okay, what they do is they go to the little, and in the case of where I've been involved, the AnyPay app, open it up, enter the amount, bink, it gets paid. It's much faster, much easier. As long as everything is working, it turns out very well. And the thing is, you have to actually get something like that set up, get enough people who know what they're doing to use it, and then eventually see, oh yeah, that's that thing that works out really well. But then you just replicate on a mass scale. This is something that's very easy to sort of show.
Yeah, well, not only that, on the consumer side, every time someone hands over their credit card, you're handing over your private key effectively. You're giving, and if they take that away, they could either copy that. They just need to, if they've got a camera there, they just need to go like this. They just need to go whoop, whoop. And the camera spotted both the numbers on the back and the front.
I mean, let me tell you a couple of the stories that along those lines that caused me to completely ditch fiat currency was because of that. Was first off, I had my debit card deactivated one time because I bought something at a grocery store that they later found there was a credit card skimmer there. And so they found out that like all the cards that were used at that grocery store could have been compromised. Therefore, they had to shut that down. So first off, that's a very scary shot. Like what? I could just buy a thing at a wrong store and all of a sudden I just lose all my money.
Yeah.
And then
fraudulent charges. Yeah.
Yes. There have been a few other times when there have been some like extra double charges that just show up on my account. And especially when I was not doing very well financially, that's a very scary thought of just like crossing your fingers, hoping you'll have a certain balance when you wake up in the morning. And what the straw that broke the camel's back was finally, I was going to withdraw money for rent. And I looked and I saw a negative balance because someone somewhere had scribbled something on a piece of paper and just said, oh yeah, it's him. And it didn't even look like my signature, look like my name, anything. It was a very amateurish check fraud type thing. I don't even know how it wasn't even one of my checks. They just like got a check at the bank and then just scribbled some stuff in the bag. I was like, yeah, looks legit. Let's take all his money. And I was on the phone for like a whole day talking to these people saying, hey, can you reverse this? This is not working out. And as soon as I did get it reversed, they said, well, we have to close the account because of this. Do you want to open a new one? I said, no, just give me what I got. I'm done. I'm done with banks forever.
Nice. Man, like I can imagine the meeting before they put the little numbers on the back where they just had the credit card at the front. And imagine the meeting, too many people are stealing credit card numbers. And some joker around the table of executives at Visa would have gone, I've got an idea. What about we turn the card around and we put 3 more numbers on the back? I mean, what kind of a ridiculous, stupid system are we?
It's the thought that counts.
It's the thought that counts. I mean, it's just insane. It's just insane. It's 1950s technology. In 2018, it's ridiculous. It's ludicrous. We've got to move on.
Absolutely.
Agreed. Awesome. Well, and from just to kind of dovetail all that from a macro perspective, I like to look at these things from, the big picture a lot of times. And I think generally what we're talking about, what we expect out of currency is something that's going to act as a medium of exchange, right? And the Bitcoin camp has very much moved into the Bitcoin core camp, moved into the store of value side of things. And Bitcoin Cash is still pushing the medium of exchange activity. And I don't think anybody's really taking on the unit of account aspect of money. So, and except for maybe some stable coins. Yeah. And I just don't see that coming until people start revaluing things in something that is more ubiquitous.
Yes. And more importantly, that the price of goods and services actually priced in cryptocurrency remains more constant than the prices placed in Venezuelan bolivar, because sometimes like the amount of dash you have to pay for a certain thing has been known to fluctuate quite some bit because we're at the early stages of this whole thing.
And I think it's probably going to be that way for a while. Yeah.
Yeah. And that's the thing was like with the store of value thing, which obviously I was first and foremost a precious metals bug before I got involved in cryptocurrency. So obviously I cared about my money not losing value. So yes, I do care about that, but that's not the main thing I care about. The main thing I care about is being able to actually use this kind of thing, because no one censors you from storing your gold bullion at home necessarily. That's not how they shut down your business. Is they don't just raid your house and take your gold. I mean, sometimes it could happen, but that's not the biggest thing. It's that you cannot use it as legal tender. They keep you from doing that because they know that you will need to use their tool in order to use your everyday life. And and honestly, this is like the sad part is who has savings anymore? Like this, it's really sad to say. There's a privileged few who have like a decent 401k or retirement fund or whatever, who have just always keep a few months living expenses in the bank just in case. But for the most part, people don't have anything. They're living, I mean, I hate the paycheck to paycheck kind of expression, but it's sort of true. A lot of people just have what they can spend, and they don't want to invest in anything really because they can't afford to have that out of their liquidity pool. And so the liquidity pool is their biggest thing that most people are going to have. And you want something, if you're trying to save someone from the ills of some kind of an inflationary currency or something like that, what you'd want to do is you want to affect that in that liquidity pool. You want to give them something that then they can use to pay their bills, so they can actually afford to have it in the first place.
Right. Agreed.
Yeah. In Germany here, there are a lot of savers. Germans are notorious for saving. So I think depending on the country that you're in, but Germany, because they've seen the hyperinflations and they're surrounded by countries like Russia, who's seen 3 currency crises in the last 30 years, where everyone's lost all their money apart from people that are close to the party. But we have record sales of private safes here. Safes are flying out the door. People are taking money. The gold shop in Berlin is doing crazy amounts of profits. I think it was $100 million per 100 and something million a year last year.
What's a safe? Is that like a hardware wallet?
No, yeah, the safe is just a big metal box. The Tresor. The German word for safe, actually.
It's a big ass treasure.
Yeah, exactly. There's
I guess what I'm saying is that, this is the mainstream. This is the normal person on the street who still haven't got their head around crypto. And they are going to head towards crypto once this technology gets easy to use. And we were talking about the UX before. But not only that, once their friends say, hey, you should check this out, they'll stop seeing it as something that only people in the dark market use, or dodgy, sketchy weirdos, or just technocrats. But actual normal mum and dad and kids, especially the youth, they'll really kickstart it off. But we can see it, Joel, your example in Venezuela, how its exponential adoption now is really showing that that's happening.
Yes, and it only happens, this is my little rant. I mean, I usually try not to go too negative. This is as negative as I'll get. My little rant is that too many people involved with cryptocurrency seem to do the whole build it and they will come kind of strategy, that people, hey, I created it. It came from the heaven, blessed by Satoshi himself. And then people will just find it, organically pursue it, and then start integrating it into their business, their daily lives, all the services. There's a lot of work that actually needs to be done. And this whole build it where and it will come is how you, almost 10 years later, and pretty much no one uses cryptocurrency as far as like global payment systems. It's extremely limited. Almost 10 years later. You have to have a good plan, run it like a business. And also, just if you're not into the professional adoption game, if you're not going to run a help center or go and actually flip a whole bunch of merchants and act as support, if you're not going to do all that, you have friends and family and acquaintances, educate them, talk to them. And it's not all wild-eyed Alex Jones conspiracy theories about, they're going to come and confiscate all your money when the lizard people take over. It's not all like that. There's some common sense type stuff. You say, hey, remember that time when your card got declined because of this? Hey, remember that time when you got an extra withdrawal on that? Hey, remember the time when you had to wait to get verified? Remember when someone stole your identity, that you needed your financial identity to open up a new card, and this you just get a wallet, get an app, and you write down a piece of paper and stuff it in your sock drawer or whatever to back it up, and then that basically deals with your wallet. Hey, remember when you get stuck up by a gunpoint and then they took all your credit cards and they bought a whole bunch of stuff before you could cancel it all, or they just took the cash out of your wallet? Remember all this stuff? You can actually just talk to a person on a very individual level and just say, hey, why don't you try this stuff? Oh, what's the worst that can happen? Or you can say, I'll give you your first bit of this, or hey, let's meet with a whole bunch of other people and talk about it.
Yeah, absolutely. I mean, the merchant adoption thing, though, I think where I'm seeing it mostly is by freelancers. We're heading more and more into a freelance economy. I think these people, especially coders and graphic designers and people, perpetual travelers, these are the ones that are really taking it up a lot quicker than actual stores on the ground. We pay multiple freelancers in crypto, and that is a lot easier than trying to convince an actual store. So I think really, in terms of adoption and user adoption, merchant adoption, I think it's a lot more of this freelance economy, which is growing bigger and bigger and bigger.
Speaking of user adoption, if we don't wrap up soon, they're going to have to adopt Chuck or kick him out of the library.
Yeah.
So,
well, I think
yeah,
I mean, you're a digital guy, Chuck, and they're an analog world, and they don't like the competition you present.
Right.
You got more knowledge up there than they have in all their books.
Let's give a quick closeout on how people can find both of you. And what I'm actually going to do is we have enough content for a full show on this, so I'm just going to edit this into one full show instead.
Nice.
So,
yeah,
go ahead, Joel. Where can people find out more about you and what you're doing with Dashforce News?
Yeah, so I run dashforcenews.com, which is the #1 source for Dash News anywhere. Specifically, I think it's the only Dash-specific publication out there. Also, discoverdash.com is another one of our projects. That's the merchant listing where you can search in towns near you, wherever you are, see if you can actually spend Dash today, or if you get a new merchant to take it, submit it there, and then there you go. There's also a live chat if you want to know anything and everything about Dash. 48 hours a week, there's a guy there checking out, talking to you on there. So check that out. As for, I'm the Desert Links on Twitter. Desert as in not dessert, Links not Linux. I've been called the Dessert Linux before. It's a little rough.
And how about you, Josh? How can people find out more about you and Vaultoro?
Hey, so, you can check us out on Twitter. That's at Vaultoro. That's Vault as in a bank vault, and Oro, which is Spanish for gold, ORO. And of course, Vaultoro.com is basically where it's at. And I'm tweeting all the time about different crypto projects and Dash and Bitcoin.
All right. So it's a great place if you're a gold bug and you want to get interested in cryptocurrency. Maybe Vaultoro is a great place to start and kind of grasp that concept of gold meets crypto.
Absolutely.
All right, man. How about you, Chuck? I can't hear a word you're saying. They must have cut him off. All right. Well, we'll talk to everybody next time. Bye, Chuck. All right, man. Thanks, guys. Thanks for your help.